All right, so we are going back to the chapter 7 and 8 exercises here. This is where we last left off. We finished our transaction on the 18th. Okay, so right now we currently have 570 units available on hand. So let's see what happened next on May 20th. May 20th, we end up making another purchase of 400 mugs at $2.80 each with a freight of $80 on an account from Cuppies Co. with terms of a 5% 15 net 30. Okay? So in this case, again, we've already journalized this again once before, right? We made a purchase of inventory on an account for 400 units at $2.80 each. So in this case, I'm going to go ahead and use this one right here. It is May 20th. Okay. So here we purchased from Cuppies Co. This time we purchased 400 units at $2.80 each with a freight of 80. So in this case, what is the total amount that I owe?
1,200.
So 400 times $2.80. Okay. Plus the $80 worth of freight gives you $1,200. Okay. Right. And of course, we also get the terms of a 5% discount if we pay it within 15 days. If not, it's due 30 days. Okay. So there you go. We journalize our transaction here. So let's plug it into my inventory worksheet. So now I'm going to change my cost per item because I made a purchase of 400 units at $2.80 each with a freight of 80. So in this case,
That's 1120.
1120 plus 80 will give you your 1200. Okay. So let's go ahead and update my inventory because now I have increased my inventory because I purchased more inventory. So 570 plus 400 will give you 970. And we're going to increase my total cost by $1,200 to give me a grand total of $2,830.32. So there you go. Now my average cost per item has increased due to, right, the increase of inventory, right? Because I purchased them at $2.80 each. Okay. So now it is $2.91,785. Okay, so that's my new average cost per item. Okay, so I can hide this number and I can go ahead and drag that formula down so I can have it consistently calculating the rest of my scenarios. Okay. So I just purchased inventory on May 20th. And of course, that very same day, you also end up selling 30 mugs for $10 each for cash. Okay. So once again, we've seen this transaction before, right? Because we sold 30 mugs for cash. Okay. On May 20th. So if I sold 30 mugs for cash, okay, how much is my total sales if they were $10 each?
300.
300 plus my tax.
$24.86.
24 should be 24.75.
Yeah.
Okay, right.
I
30.
did something wrong.
No worries, no worries, no worries. So it should be 24, unless, hold on, let me, did I do a typo? 8.25%. Nope. Okay, so it should be $24.75. So therefore, you should be getting 324.75. Okay. And because I end up selling another 30 mugs, right now I can calculate that after my purchase. So in this case, right, my average cost per item has definitely increased. So 30, right, at $2.91. Okay. What is my cost of goods sold now?
$87.54.
$87.54 is correct. Okay. So therefore, I need to update my inventory once again because I just sold another 30 mugs. Okay, so I should be left with 940, right? And I just sold $87.54. So that should leave me with $2,742.78. So therefore, that is how many goods available I have to sell. Okay. So in this case right here, I calculated what it cost me to sell those 30 mugs. It cost me $87.54. Okay. So then let's see. May 22nd, customer B pays in full with cash. Okay. So May 22nd, let's go ahead and take a look at when we sold to customer B. Okay. We sold to customer B on an account, let's see right here, on May 12th. Okay, we sold 60 mugs to customer B on May 12th. However, customer B ended up making a refund on May 15th. Now, the original date that we sold to customer B was on May 12th. And we gave the terms of a 10% if they paid within 10 days. If not, they had to pay in full in 30. In this case, did customer B make the discount?
Yes.
Yes, they did, right? Because 10 days from now, right, is the 22nd. And guess what? Customer B decided to pay on the very, very last minute. So in this case, we have to grant customer B a discount. Okay? So let's take a look at my chart of accounts. I have to use which account?
We received cash, so that's debited.
Good,
Accounts receivable has to be credited.
good.
And sales discount?
Sales discount, yes, because we sold to the customer, so therefore they paid within the discount due date, so they are receiving an actual discount. Okay. So let's take a look at this again. So customer B is paying in full with cash on May 22nd, and let me see, May 12th and May 15th are the journals we're going to take a look at. So good. So we acknowledge that it's May 22nd. We're going to be receiving cash, and we're also going to be receiving, or not receiving, but giving the sales discount. Okay? And we need to reduce the amount that customer B owes me, right? So accounts receivable. Okay, so that should be cash is 102, sales discounts 405, and then accounts receivable is 403. So in this case, let's actually calculate how much in grand total does customer B actually owe me. So again, the transaction is happened way back on the 12th of May. Here you go. Accounts receivable for customer B. customer B originally charged a total of $649.50. Okay? However, on the 15th, they ended up returning a total of the 30 mugs to refund for a grand total of the 324.75. Okay? Now in this case, right, because they're beginning to get or receive a discount from us, what else is going to happen? We also have to include that they're going to be also needing to return a portion of the sales tax because they're going to be receiving the discount. Okay, that means they're paying for what they owe me less, right? And because we charge them for the full amount of the of the prices, right? We have to also give them a portion of the money back because they are now paying at a discounted price. So we have to also give them a portion of the tax money back as well. Okay? So that is something that we also have to recognize here because that is what happens when you originally charge them at full price and then they meet the condition and now you have to adjust their sales and their sales tax accordingly. Okay, so accounts receivable is this one. So in this case, they owe me $324.75. Okay, so let's actually take a look at how much we actually sold to them. Okay, so if originally on the 12th, right, we sold to customer B 60 mugs, right, at $10 each. But in this case, right, customer B ended up returning half of those. So they end up returning 30 of those mugs. So how many mugs did we actually sell to customer B?
30.
30, okay? And how much is the discount that we're giving them?
10%.
Oh, okay, good. So that means what is 10% of $30? Or no, 10% on those 30 mugs. So in this case, if we charge each mug at $10 each, right? What is 10% of the total amount of sales we actually sold to customer B, right? Because we sold to customer B 3 mugs at $10 each, and we need to calculate how much 10% of that is because they're getting a discount off what we sold to them.
$30.
$30 refund, or not refund, excuse me, discount. So that means what portion of that discount did we actually charge the tax for that we have to take out as well?
Just on the $30.
On the $30.
$2.48.
$2.48. That means those are the two numbers that we have to calculate into that. So that how much is customer B actually going to give me after taking the discount?
$292.27.
Yeah. Do that again. Oh, don't forget the wait, hold on. $324.75 minus $30 minus $2.48. Yes, $292.27.
Yeah, that's what I got too.
Yeah. Okay. So customer B isn't gonna pay me in full, right? In this case, we would have to just calculate this and adjust the accounts accordingly. Okay. So in this case, what we can say here is customer B pay or again, what is it? Receive payment from customer B paid in full, okay, and received 10% discount. Okay. All right. So again, this doesn't affect your sales because we already, or not affect your sales. This doesn't affect your inventory because we already calculated the inventory, right? And this is the portion of the sales. The sales discount doesn't affect your inventory. Okay. All right. So let's see. That 22nd, we also sold an additional 15 mugs that day for $10 each for cash. Okay. Oops, sorry. So in this case, we sold 15 more mugs for cash. On May 22nd. So if we sold 15 mugs at $10 each, what my total sales is going to be
150.
150. How much is the tax?
1238.
1238. So that means we should be receiving a total of $162.38 for this sale here. Okay. And because we sold 15 mugs, we now need to update our inventory. Okay. It's May 22nd. We sold 15 mugs right now. My average cost per item, it's still at that $2.91. 7.8, but 4.6 instead of 5.1. So we should have sold a grand total, cost me a total of $43.77. Okay. So I just sold 15 units. Okay. So that should bring me down to 925 units left available. And I just sold $43.77. Okay. Which could give me $2,699.01 left. Which in this case, right, my average cost per item has decreased by 300,000. So I have 925 units left to sell, and it cost me a total of $43.77. Okay. So let's see what happened next. Then on May 25th, okay, here you have a sale for Memorial Day. All mugs are 40% off discount. Okay, and at the end of that day, you sold a grand total of 175 mugs for cash. Okay. So again, you have a Memorial Day sale. Everything is 40% off on the mugs. And you sold a grand total of 175 mugs for cash. Okay. So how am I going to journalize this time?
For debit, we have a cash and sales discount, and for credit, we have sales and sales tax payable.
Yes, so this time, because why is this one different than the one that we just calculated above? The one that we calculated above, right, was a person who received a discount after they've been charged for the full amount, right? In this case, we have to adjust our numbers because they made within a discount due date, right? In this case, I am selling at time of sale, right? I'm selling it in store as of today. So that means I'm going to be calculating the cash, right? I'm going to be calculating how much the discount's going to be. I'm going to be calculating how much total sales I've collected for the entire day. And I'm also going to start charging the tax based on the total discounted price, right? As of that very moment in time. So that's why this is different, because this one we have to adjust our numbers because they received the discount after they've been calculated for the full amount. This one, we're calculating the full amount now and taking the discount now and calculating the tax off the discounted price. Okay? So again, cash is 102. Sales discounts 405. Sales is 401. And tax payable is 230. Okay? So in this case, we first have to figure out one thing at a time. If I sold a total of 175 mugs, okay, 175 at $10 each, right? That's the original sales price, right? How much is my grand total sales?
Before or after the 40%?
Well, we're calculating at the total sales right now. So
Oh, that 1750.
1750. Now, this is where how much is the discount going to be if it's 40%?
70 or $700.
Okay? So this is where now the sales tax is going to be calculated after the discount. Okay? So in this case, you could go ahead and use it on the side of your journal here. How much is the actual total amount of sales you have now after the discount? In this case, 1050 is what you have, right? You got 1750 minus 700, you got 1050 left. So that is going to be the total amount of sales tax you're going to be charging based off of the discounted price. So in this case, how much is your sales tax going to be? So again, equal round.
8663.
8663. So then, how much actual cash are you going to be receiving from this sale?
Is $1,136.63.
Okay, good. Right, you're gonna take. You could do either or. You could take the 1050 plus the $86.63 and get the same answer, or you can do the whole debit equals credit method. So here I'm adding up my debits, right, and I'm subtracting out my actually hold on. I'm adding up all my credits here and subtracting out my debits to get me that answer of 1136.63, right? Because I'm trying to solve for my debit, right? So I have to add my total credits first to be able to equal up the missing number here in my on my debit side. Okay? And of course, I'm going to go ahead and make a note here saying Memorial Day sale, 40% off discount. Okay? And of course, you could also say sold 175. Okay? Okay? since I sold 175 mugs, I also now have to adjust my inventory accordingly. Okay? On May 25th. So in this case, I sold 175 mugs. So I got to go back to my inventory worksheet and report that I have sold on May 25th 175 mugs. Okay. So right now my mugs cost me $2.917843, okay, per cup. Okay. So my grand total cost of goods sold, once again, Excel has recognized what formula I am calculating here. So I got a grand total for a cost of goods sold for selling a whole total of 175 mugs is going to be a total of $510.62. Okay. So let's go ahead and update my inventory, right? I have 925 and sold 175. So I should have a grand total of 750 units. Right? I have to update my total cost here. And that's going to give me 218839. Okay. All right. So now my average cost per item has has increased by 4,000th of a penny, 400,000th of a penny. Okay. So now I only have 750 units left remaining to sell. All right. And it cost me a total of $510.62 to sell all 175 units. Okay. So 510.62. Right? Okay. So then here on May 28th, customer C wants to buy all 50 black mugs at $10 each, okay, from you. And of course, you decided to give him an additional 10% off discount because they got rid of the inventory that you didn't want to begin with. So they are buying off the 50 black mugs that you put back into your inventory, okay? And customer C decide to pay with a Visa credit card. Okay? So let's take a look, right? If a customer decides to pay with a Visa credit card, where does that money go?
In the lecture video, you said it goes to checking.
It goes straight to checking. Yes, that is true because think about it, right? When you have a credit card, when you accept credit card payments, right? The idea is it's not cash, right? Because the customer is using a different form of payment. You're not getting physical cash. And then of course, it's not that if they don't owe you the money, right? So where does that money actually go? Now, if you think about it this way, right? Where else would the money go if they're charging their credit card, right? It goes through an electronic system. Where does that electronic system actually wire the money to? In this case, right, you're not accepting cash. They are not owing you on an account. So where is that money going to? That money is them paying for what they buy from you from a credit card company. Okay, so that means they're transferring money from their credit card account to your checking account. So in this case, that is correct. It's going straight to checking. Okay. On May 28th. Now, if the money is going to checking, okay, now let's answer this question. We just sold our 50 black mugs to my customer, okay? Now, on top of that, I also gave an additional 10% discount to customer C because they're taking the inventory items that we don't want off our hands. So, how do I journalize that portion?
Sales discount,
You're giving them a sales discount. That's correct.
so you debit that.
Because, again, that goes against the actual sales, right? What else?
Then you got sales tax payable.
Yes, you got sales and sales tax payable, right? Because you sold to them.
Right.
Okay, so sales. And you also have to charge them that tax. Okay, so it's very similar to above. Okay. So in this case, if you sold 50 black mugs, right? And of course, you sold them for $10 each. How much is the total here for sales?
500.
500. Now, because you gave them an additional 10% discount off of the seals, how much is the discount amount?
50.
$50. So in this case, right, 500 minus 50 is going to give you 450. So how much tax are you going to be charging off of the 450?
37.13.
Okay. So in grand total, how much cash should you be collecting from customer C? Okay. So you can do two things, right? You can either take the discounted amount of 450 and add the tax to get $487.13, or you could do the one that I do, which is I just add up my credits and subtract out my debit to get the same exact answer of 487.13. I'm using the debits equal my credits method here. Okay. And I'm going to go ahead and mark that I sold 50 black mugs to customer C, and then received 10% discount. And then of course, if you want to add here too that they paid Visa credit card. Okay. So because we sold to them, right? We also need to also update my inventory accordingly. And this time we sold the 50 black mugs. Okay. So if we sold the 50 black mugs, how much is it going to cost me? So again, today is the 28th. We sold 50 mugs at what cost?
$145.89.
Total cost of goods sold is $145.89. So let's once again update my inventory. Okay. that I sold 700 units. Or, I'm sorry, that I sold 50 units, leaving me with 700 left. And I sold a total of 145.89, and that's going to lower my amount to 2,042.50. Okay, so a lot of things that some students do confuse too is, why am I not discounting this price right here for my cost of goods sold? My sales discount is discounting the selling price, not what it cost me. Only a purchase discount will change the cost of goods sold. I mean, the cost per item, okay? So in this case, that is a huge factor there, that a sales discount does not affect, a sales return does not affect, okay? Because again, any of those discounts is just taking a discount off the selling price of the product. So whatever you sold it for, you're taking a discount off of that, not the actual cost of the product. Okay. So now I have 700 units at $2,042.50. Okay. And that means it cost me $145.89 to sell all 50 of those mugs. So 145.89. Okay. So let's see what happened next. Now it is finally May 30th, and you paid off all 3 bills that you owe to Cuppies Co. all on one check. Okay? Check number 201. And at the end of the month, you should have a total of 700 units left on hand. In this case, yes, you do, right? We did our inventory worksheet. We did end up having 700 units on hand left remaining, okay? However, we are needing to make a payment for all of our 3 purchases of inventory that we've made, right? So in this case, let's take a look real quick of what our purchases was and how we're going to pay it off, right? So first purchase that we made was on May 1st. Okay, we purchased 500 units, but then on May 5th, we ended up returning 15. Okay, so that was the first purchase. Okay, now, did we make the discount due date to get a discount?
No.
No, right? If we're making a payment as of the 30th of May, then no, we missed the discount by 15 days, right? However, here it's May 1st. You have 30 days, so that means you have until May 31st to make a payment. So at the end of the day, you are obligated to make a payment regardless, because its due date is coming up. It's due on May 31st, and we are paying as of May 30th. So in this case, we still owe, and we're going to have to make a payment regardless whether we made the discount or not. We still have to make a payment for this inventory anyway. So in this case, that's what we have to do. We need to calculate how much this first purchase cost me, okay? And we'll look at that in the journal in a bit, but let's go through it. So that's the first purchase. Second purchase we made here was on May 8th. We purchased 250 units, okay? And then that very same day, we end up getting a discount because they gave us the wrong inventory. They gave us black mugs instead of brown mugs. And now they're saying, well, hey, you can still keep the mugs and still sell them to your customer, right? They're just a different color. There's nothing wrong with them. And we end up getting a 15% discount. So in this case, we had an allowance for this one. All right, because they sent us the wrong product, so they gave us that 15% discount as a way to reprimand for their mistakes. So then again, so in this case right here, now, since we purchased and received the items as of the 8th of May, did we meet the discount due date?
No.
No. We once again missed again because 15 days from the 8th of May, which is going to be May 23rd. I'm paying as of May 30th. So in this case, I missed the discount once again. However, I'm paying early this time, right? Because 30 days from May 8th is going to be June 7th. So in this case, I'm paying early, but I missed the discount due date, so I just have to pay for whatever I owe now. I have to figure out what I originally charged and what that adjusted discounted amount uh, left me with. Okay? And then the last purchase that we made here was on May 20th. We purchased 400 units, okay? As of this batch right here, we made no adjustments, no discounts, no returns. So that means we are going to pay for this full price. Now, in this case, right, if I'm paying as of May 30th, did I make the discount due date?
Yes.
Yes. In this case, I am going to be receiving a 5% discount because I paid within the discount due date, right? I had until June 4th to make a payment in order to receive this 5% discount. But because I'm making a payment overall in general, at the end of the month, altogether, I end up meeting the discount due date. So that means for this batch of inventory right here, for the May 20th, I have to adjust it because I am going to be receiving a discount off of the items here. Okay? So let's go ahead and take a look here. So if I'm going to make a payment for all 3 bills, okay? Right? So first I'm going to recognize here is what is the grand total amount that I actually owe in general, right? Because that's what I'm doing. I'm going to essentially pay them off completely. Okay? I'm paying for all 3 bills. So in this case, let's go ahead and calculate what is my grand total that I actually owe. Okay? So let's see, May 1st. Okay? We originally owed a grand total of $14.25. Okay? But because we end up refunding our discount, our product here, we end up getting $39.75 back. Right? Then we end up making another purchase on the 8th of May, which gave us a total of $737.50. But we end up getting a discount because we were given the wrong product, right? So in this case, we end up getting 15% of the money for those 50 mugs that were wrong. And then, of course, I also charged on my account once again on May 20th. Okay, May 20th. Where are you, May 20th? Here you are, May 20th. So I end up charging my account for $1,200. So in grand total, right now, I owe a grand total of $3,302.13, right? If you want to run those numbers one more time, right, you have 1,200. Okay, so let me see. For this batch of inventory, right, we have the 1412 minus the 3975. So you have 1385.25. Okay, for that one. Then you have this purchase here for the 737. Okay. But you end up getting a discount for $20.63. So you have 716.88. So 716.88 plus 1385.25 plus that $1,200 because I end up just making a regular purchase, no returns or anything. So at the end of the day, you should be getting a grand total of the $3,302.13. Right? Okay, that should be the 1385.25 plus the, okay, let's see. Okay, going back. Let's double check our work just in case I calculated it wrong. So we got 1385.25 plus my 716.88 plus $1,200. Okay, because that was my purchase, no returns or anything like that, for $1,200. So that should give me my 303.02.13. Okay, so that's how much money I owe to Cuppy's Co. Okay. I also have to recognize that I'm paying with a check. So where does my, if I'm paying with a check, where does that money come from?
Checking.
It's going to come out of your checking account. So in this case, checking. Okay. But we don't know what that total amount is because I'm not going to pay for the total $3,302.13 because what happened here? My last batch of inventory, I received a 5% discount. So in this case, where am I going to be taking my discount out from?
The 1,200.
Not 1,200.
Well, you take it off of the 1,200. It comes. Isn't purchase discounts?
It's not a purchase discount.
No. Where's your chart of accounts? I don't know what it's called.
It's inventory mug. We're taking out the mug.
Correct. We're taking it out from my actual inventory, which is the mugs, because that's where I placed them at original cost, right? If it I put the mugs in there for the original amount of the what I purchased it for. Okay, so in this case, I am going to be taking the discount directly out from my mugs. Okay, now you said the discount is going to be 5% off of the 1,200. Let's go back to that transaction real quick. Okay, now in this case, right here you go, my mugs. How much did I actually purchase my mugs for? And what does this 1,200 amount include?
It includes freight.
Yes. So if you want to go back to the inventory worksheet real quick, let's take a look. So I purchased the 400 mugs at $2.80, and that $20 or that it's $80. Excuse me, $80 was actually the freight. So which amount am I actually going to be discounting instead?
The 1,120.
The 1,120. So what is 5% of 1,120? You can calculate that down here as well. So we're going to be receiving,
$6.
okay, we're going to be receiving a 5% discount off of the $1,120 here. And that's going to give you $56. So that means how much am I actually going to be writing out the check for?
$32.46.13.
Good. $32.46.13 because I deserved the discount off of the last purchase of my mugs. Okay? So there you go. I have all the information that I need, right? I made a payment to Cuppy's Co., which is the vendor, okay, that I purchased from. And then I'm going to go ahead and say paid all 3 purchases, okay? Okay. Received 5% discount on purchase made on May 20th. Okay. And we wrote a check, right? Which we used check number 201. Okay. So here you go. You made a payment to all 3 purchases. Okay. You could even add all 3 purchases. Okay. made on May 1st, comma, May 8th, comma, May 20th. Okay, but the May 20th purchase, you end up receiving a 5%, 5%, receive 5% discount on purchase made on 5/20, and you used check number 201 to pay for it. Okay. And last but not least, I received a purchase discount. Okay. So therefore, I got the purchase discount off of the last batch of inventory that I just purchased. So therefore, that's the last entry I'm going to be putting in here, is that on May 30th, right? You didn't get a you didn't subtract anything out of your inventory. However, you did receive a discount off of the $2.80 per mug. Okay? So that's going to be, right, the 400 times the 280, right? And you got the 5% discount here. Okay, so whoops, I forgot the negative sign here. Okay, so I'm going to put it right here, negative. So you know that it's supposed to be subtracting out from your inventory. So in this case, I still have 700 units. Okay, however, because I paid and I received the discount off of those 400 units, right? So that means I received that 5% discount off of the $2.80 per item, which means I am going to be subtracting $56 because I received that money back. So in this case, it should decrease my total cost to be $1,986.50, which, if you recalculate your average cost per item, it should have dropped it down to $2.837850. Okay, and now we are finally done. Okay, any questions in regards to what happens when we have purchase discounts, purchase returns and allowances, sales returns and allowances, and, well, sales discount doesn't have any effect, but this is what happens when we go through perpetual inventory and how it affects the inventory worksheet. Any questions?